we have the current stock market update for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders can find this information more easily on the platform. So as we can see here, what we have is a 30-minute price chart. Each candle on this time frame represents a 30-minute trading period. And, we have started to find a little bit of support here at this $20.30 area that we have been watching. Now, there really wasn't much in this area to suggest that share prices would be able to bounce from here. The only thing we really had here was this 78.6% Fibonacci retracement, but we were looking directly into this area well before this happened. Initially, we were saying that a break below 21.90 would target $21 and then $20.30. And we can see here in both cases, this did turn out to be the case. We did see a bounce here, and then we're now seeing a bounce here. So, these Fibonacci levels are holding up extremely well at the moment in terms of their predictive ability. So, the real question here is whether or not these upside price movements can continue. I do think that we need to sort of take a step back here and sort of try to look at the bigger picture for a moment, because what we're currently looking at, is sort of a new trend wave movement in the downside direction. And we're starting to see that there is, a bit of some evidence of a price failure right around the 38.2% Fibonacci retracement of this important, most recent price move here. So if we're looking at this downward trend here, this would have started around 23.64, and then this extends to $20.30. So, as we can see, what this means here, just sort of draw this quickly here, is that we're starting to run into resistance right here, which is the 38.2% Fibonacci retracement zone. And then it's also sort of this prior high that was being developed right around the first week of October. So around October 4th, roughly. In this case, we did see a little bit of a breach higher. You can sort of see that here. We did see some price movements above this resistance zone, but we didn't see any sort of closing period above here. So you didn't get an hourly close here or anything like that. Daily close, weekly close. Share prices sort of moved into this area and then failed here. We did find support, of course, at 2030, but now we're heading right back into that same area. So, this is the real question here. If I'm bullish on this stock, what I would personally want to see would be for share prices to sort of break above this level and then close above here somewhere in this area here. If we sort of close below here, I think that what you're looking at again is another series of lower highs. So this is sort of important because, we are seeing some higher lows here on the shorter term time frames. This is a 30-minute price chart, so we're already kind of short term here. I don't want to go too much closer here with the time frame, but what we can see here is that there is sort of a trend line that can be drawn here. And you can also make the argument that this overall pattern is an ascending triangle pattern, so which would be a bullish pattern. But the key to that pattern is that you need to see the break to the top side. If you don't get the break to the top side, it means nothing. So I'm not saying that won't happen. I'm not saying that will happen or it won't happen. But what I'm saying here is that you really need to see a price bounce out of these price levels here relatively soon in order to keep this formation intact and then break above that upper base of the triangle pattern. And then you can start to threaten this longer term downtrend line. So that would be the sort of sequence of events that you would need to see in order to continue to have a bullish outlook here. We can quickly look at the indicator reading here because there are some signals here as well. As we can see here, there is some bearish momentum that is starting to be generated here, but there is also this longer term positive momentum reading here as well. So there is a bit of a conflicting signal here at the moment. You're getting two trend lines here. But the longer term trend line does take precedence. So, as we can see here, this is a longer term bullish trend line versus a little bit of a shorter term bearish trend line. This has been tested 3 different times though, and we do need to see a bounce from this area in the relative strength index. So you really need to see a bounce, something like this. So if that were to occur, then you can maintain this positive momentum and possibly break through that negative momentum. And on balance, I would say that this is a positive reading. It's not like strongly positive or anything like that, but it's more positive than negative. We can phrase it that way. So, if we're looking at potential top side here, the first thing that you do need to see is a break of this, roughly 2160 to 2190 sort of resistance zone that's starting to develop here. Share prices are trying to break above all of the major exponential moving averages. They're having a bit of a tough time doing this. You really do need to see some share price movement relatively soon in order to kind of maintain hope that this is going to continue moving higher, because this is a shorter term kind of structure here. That's not what I meant. Not what I meant to do. This is sort of a shorter term structure here. This sort of this pattern that's developing. It's really more evident really on the 5-minute price chart. But this is going to start to break down into the negative direction. I mean, it is a bullish pattern, but if share prices break that ascending trend line here, it now becomes a bearish signal. So you do need to see a bounce here. We haven't broken here yet, but we're starting to see some evidence that this is a bit of a weak trend line because we've already seen some breaks here. Share prices did bounce, so I would continue to say that this trend line remains in place. But you do need to see a bounce here relatively quickly because this is going to start to get much worse. I mean, I do think that if we do see share prices move lower from here, I think then you're looking at sub 20 trading levels, and then you're going to look at a test of this 1943 area, and I think that's where the stop losses start to kick in. I think that if share prices move below that 1943 level, then I think you start to see people exiting this trade, because if we're trading back below $20 per share, I think and what I'm talking about here would be the longer term holders. I think that if people see share prices break back below $20 again, I think a lot of these people are going to start to get frustrated with this trade and possibly start to look at some other stocks. I mean, you can make the argument that people might buy in at these lower levels, but I think lower level isn't really $19. I think lower level would be something more like $10. So here's the current stock market update for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.